Good afternoon, everyone. Welcome back. So this upcoming session is on decoding cryptocurrency, which is obviously gathering a lot of interest. Cryptocurrency, what exactly it is, how as an investment option people are taking it up. And the best person to discuss about this, Mr. Sanjay Mehta is here with us today. Sanjay, stage is all yours. Thank you.
Thanks, Manish. Any person in the room who already owns a Bitcoin or any other currencies? You got at least one gentleman. So we'll keep this from a beginner's perspective, saying that if you are looking to invest into cryptocurrencies, Bitcoin, what is it in store for us? What are the nuances? How do you take care? And get some basic understanding of how Bitcoin works, other altcoin works, and what is the underlying technology blockchain is all about. So that's my email ID in case if you have to reach out to me, mehtasanjay@gmail.com. Disclaimer: Bitcoin is a very speculative investment. Involves a very high degree of risk. Please ensure that you will lose every investment possible, whatever you have done across. So please consider yourself that this is a poker money whenever you are investing into it. It does not have more history or a performance to be backed across. So please consider this as a very, very risky asset class. Having said that, let's understand what is a Bitcoin. Bitcoin is a cryptocurrency which is working under cryptographic rules. Crypto is something where you have to solve a puzzle to unearth the next steps, which works between peer-to-peer networks, which means it's direct between two entities. There is no trusted or a central trusted party required across. And it is open source, where there is nobody who is owning it. And there are no issuer or acquirers. Anybody with a smartphone or a computer can have it across. So how do you go about doing it, and what's the history of Bitcoin? Journey of Bitcoin started in 2009 when a gentleman named Satoshi Nakamoto released the first white paper talking about how a payment can be done between peer-to-peer digitally. And that's where the open source code got created by him. Again, this identity of Satoshi Nakamoto is under question. While we understand that's the individual, but nobody has a confirmation on it. This is more of a trivia on Bitcoin. But 2010, it started growing across. The trading started somewhere in July 2010, and it grew across by 500%, which means it started with 0.06, 0.30, it grew across in 2010. Then in 2011, it reached to a price equivalent to $1. In 2013, it grew across by huge percentage with an all-time high of $143, which was like $817 by December 31. That's like crazy growth, 6 times value growth, which happened across in 2013. 2014, it crashed badly, which went down to 220, then rose again to 430. In 2016, it was around $1,000. And every time there were some incidents which created this volatility. 2017, when it started, it was 2,851. In August, it started with 3,280. And that's where Bitcoin splitted into two different coins, Bitcoin and Bitcoin Cash. We'll get into that Bitcoin Cash stuff a little later. And then it had an all-time high, and now it has crossed even 5,000. Again, it has crashed and come back to 4,500. So it's anywhere between 4,000 to 5,000 is what we can look at. But if you have to see across the price rise, how it has gone through, since the Bitcoin, BTC is the short code for Bitcoin. July of 2010, it has risen over 51,000%. $1 of Bitcoin 7 years ago today is valued at 1.4 million, which means if you would have invested in 2010 rupees 45, which was the dollar price, today it would have been 9 crore rupees. Rupees 45 in 2010 would have been 9 crore rupees. While it looks very glamorous, there are risks associated with this kind of volatility. There are analysts who are predicting, saying that the coin could be worth $600,000, and there are other people who are throwing other numbers also. But the whole idea here is everybody is bullish about this digital money. They consider this as a digital gold, and all the possible investment opportunities which are available right now, this is one of the diversification which investors are looking at. Let's look at how the value of money has been depreciating. The 100 years of chart where money has been depreciated over the time by 95%. It is just unbelievable. 95% of the value of a dollar has been eroded. This is due to the central bankers printing money continuously whenever they wish. There is no rule which applies to them, and they keep on printing the money and increase the circulation. Bitcoin is something which is finite, like gold. It cannot be duplicated. You cannot reprint like money. Bitcoin is something like gold. And that's why most of the investors classify under it as a digital gold. And as one of the founders of Google has said across, anything in the digital world which cannot be copied or counterfeited is very valuable. And Bitcoin gives that intrinsic value. Now let's put the world's money into perspective. Today Bitcoin value is very small, around 41 billion. And with other cryptocurrencies around 180 billion. What we are predicting or seeing across is in next 10 years, will this grow across to the market size of gold? Yes, it is possible. And this is what is driving the whole phenomenon with the price rise, which is happening across. So this is the modernized gold, digital gold. Today, there are two types of class of investors. One which believes into Bitcoin. They feel Bitcoin is unregulated, so let's get into it before the regulation comes in. It's limited in supply, hence it will always retain the value. Creation is not subject to any central banker. Transacting in BTC is easy, which means that today, if I have to transfer 50 tons of gold cross-border, it's a huge task. But here I can do on a click of a button. Today, if I have to store 50 tons of gold, it requires transaction cost. It's heavy. Anything which is physical, it will cost. Whereas Bitcoin, it's easy to manage. The cost of transaction is negligible. While there are other investors who feel Bitcoin is unregulated, we can't invest. There are 750 plus cryptocurrencies like Bitcoin. Hence, it's all scam. They don't believe into it. The Bitcoin wallets or exchanges have been hacked. And that's why the faith saying that my money is secured is always a matter of trust for most of the investors. And price volatility is so high that they don't believe, saying that this is an asset class they should invest. And to mine a Bitcoin, there's huge amount of energy and computing cost. There's something which is called mining, which is associated, which means that you can't unlock a Bitcoin. It's a digital money, it works behind an algorithm. So you have to solve a puzzle. And to solve a puzzle, you will have to use GPU and energy, a computer, to unlock that puzzle. And person who unlocks it gets that Bitcoin. And that's why there are energy costs which are associated with it. Hence, people don't find it green. But the intrinsic value is created because it avoids the hyperinflation. You can't print it more. There is huge amount of security, which is why, because of its technology called blockchain. Bitcoin itself cannot be hacked. What are getting hacked are exchanges or wallet which stores Bitcoin. Bitcoin as a blockchain, because of the underlying technology, is foolproof. You can't hack that. So security is one of the major aspects which gives its value. Then comes across the fraud side of it. You can't counterfeit Bitcoin. There is only single entity. You can't say that this is a fake gold. You can't counterfeit Bitcoin. This is how it works across. This is the only little technical side of it, whereby if somebody is going to send a request saying that, let's do this request a transaction, that request is broadcasted to multiple nodes. These are called nodes. These are all computers which are verifying or validating those transactions. So let's say when I am giving a person A is giving a person B money, usually it is a banker which does that trusted transaction. Bitcoin is a peer-to-peer, which means A will give money to the B directly without the trusted party. Now, who is going to verify that? These are independent computers which verify the transaction that A has sent the money and B has received. So that is the validation of this broadcast network which does across. And once the transaction is verified, it is added to the block. Typically, we have heard across in our saying that we have record of transaction or database of transaction. In this technology, it is the block which gets added. So there are previous blocks which are previous transaction. The one more block will get added. You can't alter, modify, delete any of those stuff. Only thing which you can do is add blocks. So there is a complete history of blocks which is available. That's why this is tamper-proof. That's why it's valuable. And finally, that whole new block is added and the transaction is complete. When the new block is added, only when the transaction is verified by those computers. And each one has a copy of those ledgers. That's why it is called a distributed ledger system. Typically in the bank, the central bank will hold everything. There is just one entity where all your records are hosted. Whereas in the distributed ledger, there are multiple computers holding the same copy of your transaction. So everyone within the nodes has got the same copy. So how do you build a consensus between all those computers is important. So there is a word called consensus which comes in play when blockchain is there. So blockchain is to Bitcoin what internet is to email. Right? So basic underlying technology with all cryptocurrencies is blockchain, and that's why blockchain is very important. So blocks are packages of data which is carried and recorded. The data is recorded on the blockchain network. Blockchain is a shared ledger. As I said, it's a distributed ledger where transactions are permanently recorded by appending the blocks, which means only addition of blocks is possible across. Blockchain serves as an historical record of all transactions ever occurred in the genesis of block to the latest block, hence the name blockchain. And that's where the blockchain technology comes. Block Explorer is an online tool to view all transactions, past and current, on the blockchain. They provide you useful information, how this puzzle was solved, which computers verified the transaction. So when I send a Bitcoin from an A to B, typically takes around 6 to 8 hops before it confirms a transaction. So which were the computers, how the network hopped, it was something which was mentioned. And typically number of blocks which are connected is called block height. These are some of the glossaries associated with Bitcoin. You don't need to learn all this, but if you know, you are well informed. To buy Bitcoin, this is not necessary. What are altcoins? These are alternative to Bitcoins. There are 700 which was mentioned earlier, but now there are around 1,000 plus cryptocurrencies available, like Bitcoin. So these are called altcoins, alternative to Bitcoins. Majority of them were taken out from a code which was very similar to Bitcoin, tweaked across to make something better, and new coins were created. And that consensus system, which I mentioned, saying that the group of computers which are working together to validate that transaction or confirm that transaction that A has given money to B, is called proof of work. Then there is called proof of stake, the delegated proof of stake, and this is more getting into technical. So we'll leave it at this. Ethereum is the next most popular cryptocurrency after Bitcoin. What does it do? Bitcoin is just transfer of value, where money is transferred peer-to-peer between two individuals. Here, Ethereum is a smart money, where I can define rules for the money, saying that whenever this incident occurs, this money need to be transferred. So these are smart contracts. You can write a program on a money, whereby I can program money saying that when this event occurs, please give this money to X or Y, or this is how it is going to be. That's why Ethereum is far valuable than Bitcoin to program contracts. That's why it is called smart contracts, where you can write programmable money. In internet, we exchange information. In blockchain, we exchange value. This is on a conditional way you can exchange value. Whenever something occurs, the value needs to be transferred or recalled. Everything you can program across. These are the list of coins. The visibility is little challenging, but these are the top 10 market cap. The coins which are available: Bitcoin, Ethereum, Ripple, Bitcoin Cash, IOTA, Litecoin, NEM, Neo, Dash, Ethereum Classic. These are all the top 10 cryptocurrencies with the market cap. You can go to the site called Coin Market Cap. You will see all the coins listed and their market cap. These are the 1,000, plus 1,000 coins. These are all the scam coins. It is not getting traded. People have lost money, but they had registered at some point in time. You have seen across those small caps which are existing in listed market where the trading does not happen. So these are all the scam coins, or the products gone bad. These are the top 10 Bitcoin markets. As what we have seen across, there are exchanges. Very similarly, there are crypto exchanges where I can exchange Bitcoin or Ethereum to other coins. And I can trade Bitcoins. I can buy and sell Bitcoin as how normally you buy and sell securities. So these are all the exchanges on which you can buy. These are the top 10 exchanges where Bitcoin volumes are there. So let's try and understand which are the top exchanges. So for example, this is one of the exchange called Polonix, which trades into, these are the top 10 active coins on Polonix, whereby they are trading across on the Polonix exchange. There, that's the domain. All the coins which are there, and what's the volume 24 hours. So various coins are traded across. So these are the kind of volumes which are seen across with Polonix. This is the interface of Polonix exchange. This is how it looks. If you go to the website of Polonix, this is how, and that's the coin called Bitcoin Cash, and that's the trading, that's the 24 hours volume. The size is small, but that's how it looks across. You can go to Polonix to check it out. Bitcoin Cash. This was a new coin created across in August, which had a far faster consensus algorithm, which I spoke earlier. Typically, when I transfer Bitcoin from peer to peer, it takes around 20 to 30 minutes minimum to confirm a transaction. Now that's too much of a long lag time. And that's where all the miners, all the nodes who validate those transactions, they got together and created a new consensus algorithm by which it can be done faster. And that's how the Ethereum Cash got generated. Bitcoin Cash. Very similarly, Ethereum also had a split called Ethereum Classic and the Ethereum. So what we are seeing right now is Bitcoin and Bitcoin Cash. this is my perspective and my assumption, it will play out the same way as what Ethereum Classic and Ethereum went, where Ethereum Classic and Ethereum both were at the same level, but Ethereum moved much faster and grew in volume and value, both faster than Ethereum Classic, because it had more usable properties. Very similarly, Bitcoin Cash, with my perspective, will move much faster in coming times than Bitcoin. I see this as the best money in the world because it's fast, transact in seconds, you can get confirmation in minutes, reliable because network runs without congestion, sends money globally for pennies, transaction costs are negligible, easy to use, no hassles, a payment system that is a proven and store of value, and secure. And below, these are the comparisons between Bitcoin Cash, gold and fiat, which is your regular currency. I mean, the visibility is a challenge, but that's where the source, durability, portability, fungibility, everywhere this is valuable. With great money comes power of responsibility. The challenge, as I said across, is people worry about getting hacked on the exchanges. Bitcoin exchanges are hacked regularly and we see that in news. We had one of the Indian exchanges called UnoCoin recently got hacked, where they paid back all the people who lost their coins. But this has been regular feature. So what happens and how do you save yourself? Do not keep most of your coins online. There is something which is called cold storage, offline way of storing Bitcoin. So it can be on a USB drive or other storage media, on a paper wallet or an offline Bitcoin hardware wallet. So these are three ways where you can do it. Idea is, because we have got beginners, I think this is, we can talk to this later, or you can come after you buy one of the first Bitcoins. This is one of the alternative coins called Stellar Lumens, which I am currently actively looking at. What it helps across, this cryptocurrency is all about transferring global remittances. And the coin is used across as a protocol spamming protection. So there is a protocol called Stellar, which is used across between banks to ensure that cross-border money transfer is done across. Today, if I have to do a cross-border money transfer, typically it takes SWIFT 2-3 days before the money hits your bank. Here, I can do it across instantly using this protocol, and to avoid the congestion or spamming of network, Stellar Lumens are used across to enable transactions. So this is one of the coins which I am currently looking at. You go to the Stellar website, you will be able to see which are the use of coins. Who is the founder? Why I am sharing this is, before you invest into any of the cryptos, you need to understand what is the underlying blockchain technology. What is it doing? What problem it is solving? And who are these founders? Are they capable? So typically three things which you need to look at it. Is there money to be made? So for example, with cross-border transaction, there is huge amount of money to be made. Because there are huge transactions happening, there is continuous cross-border transfer of money which happens across from multiple currencies. So this is valuable. So first question if you need to get yourself answer to is there money to be made? Second is, are these people who can make me money? Or are they experts in the blockchain? Do they know what they are doing across? Do they have that pedigree to create across the product what they are visioning? Will they be successful? What is the execution? Right? So to know the team. And finally, how much money I can make. So which means the price of the coin, at what point you are entering the market, understand those terms. This is another coin called Peer Place. I have invested into this coin. I have a position. This blockchain does across gambling, betting, takes across bets. Typically in bets, you have got a house which takes the bets and the proceeds are distributed. Manipulation can happen, there can be frauds. This blockchain helps across take bets and do the distribution in a decentralized manner, which means there is no single owner. All the bets are taken on the blockchain and to to the players immediately. And that's why these guys are valuable. I know the team. I know they have that capability to deliver. Their first games are going to be released. Hopefully it should grow. What is an ICO? How we have seen across IPO in our regular exchanges, it's called ICO, which is initial coin offering. It's a crowd sale, which means that you are subscribing to the first primary coin. You are not buying a secondary coin on an exchange. So ICO, all the coins have their ICO. There are new number of cryptocurrencies which are running across on the ICO, and they help across substitute venture capital. Most of them releases white paper, the products are on blueprint, and they are willing to design, and they need funding to create those blockchain. Idea here is you need to be potentially able to possibly spot a scam in that ICO. There are tons of ICO scams which are happening, which will take your Bitcoin and Ethereum or even your fiat and not deliver. They might have a temporary pump and dump kind of situation. So you need to be very well, who is the team, what is the reputation, as I mentioned across, right? All possible checks before you actually commit money to those ICO. But ICOs are good way to make money. So for example, there was a recent ICO a month back called Civic, which was there. They issued 1 billion tokens. This is how an ICO cap table works across. So they had a maximum cap of 33 million. 1 billion tokens were created across, 33 in a token sale, which was the ICO. 33% will be retained by the company itself, so that the founders' interests are covered, and allocated to the people who will use Civic. What does Civic do? Civic does across identity management, which means when you log into any of the systems, it helps across validate who is the person, the KYC part of it. So how you validate across yourself with Google or Facebook before you log in into any system? Civic does that on a blockchain. And who are the founders? There is a gentleman named Vinny Lingam. He's popular like on Shark Tank within South Africa. He was one of the judges. So you know it's a potential prestige name. The market size is large enough. The terms are favorable. And they are holding this in US market where regulation wise they will be paying taxes. So I found this very interesting. And you participate into it. They started issuing, token sale was at 10 cents. 33 million, 1 billion tokens. So 10 cents was each token. That's the wallet. This is how a wallet of a digital wallet looks across. And that's your address. This is your 64-digit address on the top. That's your identity. Account balance of Ether is X. And that's your 5,000 token balance. That's your CVC is the token name. So this is how a wallet will look across on your computer. That's the market cap of Civic. From 10 cents it has grown to 0.5. Maybe right now I don't know what is it. I don't track across daily basis. But that's like it grew across almost 5 times in less than possibly a month or so. This is one of my portfolio companies called EOS, which was done by Block One. They created across, or they are working on to creating world's first blockchain operating system, whereby to create decentralized apps. What are decentralized apps? All the blockchain apps are decentralized. As I told across, blockchain works across on decentralized distributed ledgers. So let me give you a simple example. Today, what does Uber do? Everybody understands what Uber is. You have got a consumer who says that I want a taxi. You have got a taxi guy who says I am available. And Uber runs a contract between that customer and the taxi guy. The job of Uber is to ensure the contract is fulfilled, that the consumer and the taxi guy both are paid and the contract is honored. And that is what Uber does. That's a centralized system what we live in. Future of the world is decentralized. What will happen is the consumer and the taxi guy both will be on a blockchain where the contracts are filled automatically by those decentralized computers. You don't need an Uber to ensure that those contracts are fulfilled. That's where the new blockchain world is going to be. where you don't have a centralized authority controlling data nor transactions. And EOS is creating that kind of blockchain software where decentralized apps are being built across. Currently, the market cap is around possibly $1 billion, and I've been investing into this coin. Their coin is called EOS. One of the upcoming ICOs which I'm looking across, in fact, EOS ICO is right now on. They are having a year-long ICO. You can go to eos.io to check how it's performing. Unicorn is one of the another ICO upcoming which I'm interested. It should be they are raising around 100 million. I'm looking to participate into that. Please take your own risk before you invest into any of those risk assessment, before you invest into any of those altcoins. 10 rules for crypto investing. The final slide and summary. What do you need to take care before you invest into cryptos? Build a portfolio on Bitcoin. Start with Bitcoin. Easy. You wait for possibly 10 to 15 years and think that अरे मेरे को मालूम था ले लिया रहता था तो, right? So don't get into that mode. Take some bold decision. Play on a poker money, as I said across. Don't bet your house. Index and track top 10 cryptos. Which are the top 10 cryptos available? Please track that continuously. See their teams. See what are their uses. Scale out. Take some profits. Whenever you have got possibility, please take on profits. Buy on the dip. Do not sell on the dip. Volatility is high. So keep working on the dips. Do not overtrade and lock up coins. Do not just lock up your coins permanently or overtrade. Let profits run. Cut losses. Watch 7-day price, not 24 hours. Typically, I've seen across anybody who gets into crypto because the prices are 24/7 fluctuating, right? They don't have market hours. It's a global market. So you keep on checking across. People also wake up at night and check kya ho gaya bhai. Right. So ICOs, do your own research. Be aware of herd mentality. Research micro caps that might rise by orders of magnitude. Many of the blockchain developers, right, they are unheard of unless their products are successful. Many of the cryptos which are really powerful. So for example, EOS, one which I've invested, because there was a founder, CTO called Dan Larimer, who had a success with 2 other cryptos called Steam and BitShares. So he was well recognized. Hence, EOS got whatever that $1 billion before even the product is out. But there are companies which are working hard on blockchain and has got potential. So keep on working on looking at which are the cryptos which you can buy across on exchange. And leveraging has a role, but be careful. There are options where there are products which are getting created where you can leverage your coin or loan it out to buy other altcoins, but please ensure that you are doing that in limits. Thank you. Any questions? Happy to take. Yeah, go ahead. So in India, if you are going to buy across, you need to pay in check and you give them bitcoins. They will give you. There are trading desks which are there. As I mentioned, there are trading exchanges like UnoCoin, Zeppe. There are many. You Google it, you will get across. CoinSecure. Everybody has a challenge. Take your own risk. Yeah. Sorry? Yes. This will become mainstream world. So I usually take across how credit card systems worked, right? Previously, to transact a credit card, you will have to find a shop who will accept it. Transaction costs were very high. People used to charge more money than the money you were supposed to pay. It took around, I think, 20 plus years to make it mainstream. And today also still, it's not mainstream. So idea is any of the new payment systems or any of the digital money kind of system will take time. But my assessment is people will lose faith in government's money very quickly. And we have seen demonetization, one of the classic example, that today your money can just be paper. easily. Now, why people move to gold or any other assets is because when there are uncertainties, and every other currency is going to face that challenge. Hence, this digital money is going to be more and more valuable.
From your presentation, it appears that you do a lot of research, right?
Yeah.
But are there funds out there where you can invest which do that sort of deal?
Yes, there are, but you need to then do the research on the funds.
But that's a bit more structured. So
Yes, no, I wouldn't. Very early days. I mean, there is hardly any data of their success or payouts, right? You can't take judgment calls.
The whole game of cryptocurrency is the supply. Supply is limited. So when you see that on what scenario will it come where it will be acceptable globally as a commercial transaction? Today, certain parts of certain country are using this Bitcoin as a transition, but not everybody will have it.
So,
The point is the supply is limited, so that how not everybody will be having that. So how it will become commercial?
no, so what happened across is every coin, understanding that this limited supply needs to be countered, they have defined a rule saying that they will have 5% inflation or 10% inflation on the supply. So every year they will grow by that X percentage depending upon the algorithm. So all coins have a different set of, so EOS has after 1 billion tokens, they will have 10% inflation every year. So it will grow by 10%. So that is one which solves the liquidity challenges for the coin as it becomes more and more popular and acceptable. Next, the way I look upon is most of the businesses will start generating their own cryptos. Any trusted house who would like to control their own economy or own business world, whatever you say across, can Tata create their own crypto? Yes, they can. It would be the more trusted than possibly your government fiat. And why I am taking that analogy is, for example, today many of our money is in wallets, right? Starbucks wallet, and more you use it. So let's say I have used 50,000 bucks in that Starbucks wallet. Typically I would have got across goods worth of 60,000. There are free stuff. So my value of that 50,000 actually increased within that ecosystem. And if you go back in history, every kingdom or king had their own coins and that were tradable. Very similar scenario is going to come with businesses, where businesses will have their own currencies and consumers will trust that currency more than government money. Because government are printing daily. You don't even know what devaluation of that currency will happen.
What are the regulatory risks that you foresee?
As I mentioned, currently this is unregulated. Hence, it has got challenges and pros. It can flourish and you can get into scams. So today, let's say you lose money, there is no authority where you can go out and complain. So scams are everywhere. So you need to take your risk. But because there are no regulations, it's like Uber and Ola, right? People didn't knew how to manage them. Har taxi wala leke chal raha hai. Then government came in and put in some regulation. That's how things will happen with this industry also. Regulation will come, but when it comes, the growth of the industry will taper. Here, you are entering at the exponential side of it, right? At the entry level.
So, but something like, a government wanting to control it or disregard it is always a risk.
Yes, so China just 2 days back has banned all the ICOs in China, which had happened across, and they've asked people to refund money. So these are risks which are going to happen across. But idea is, how do you find those? So for example, if I have to list across, US has passed across a law saying that they will consider all the cryptos as securities, unlisted securities. So they are now considered that, and you will have to pay taxes accordingly. So Civic, for example, has to pay 33% or whatever that tax is over there. Now, for example, EOS, the company where I have invested, or even with Civic I have invested, but here the company I have invested, that's registered in Cayman. तो मेरे को Chinese भी नहीं लगता है, US भी नहीं लगता है, right? So it works across. So you need to work your research backwards, saying that what is worthy of your investment. Sorry? Okay, time up. He says no.
Can I have a couple of questions more, please? Two more questions.
Okay, yeah.
So all this then goes back to the gatekeepers, right? Your miners. So who are these people mining the bitcoins? Is there enough reward to ratio for them to keep doing this in a long-term horizon?
So mining right now mostly is controlled by Chinese, as everybody knows across, because the GPU cost and the power cost both are low across. My suggestion is to keep off the mining side of it if you are looking purely from an investment side of it, because the time investment, the focus is not worth the reward. Better is to find more altcoins, get in early at the conceptual stage, and try to see how you can build a value out of it. It would be far more rewarding as an investor perspective.
Isn't that not contradictory? Like when you say that you don't mine but you trade, who's going to support those transactions?
No, so what happens across is, in many of the other altcoins, these are pre-mined coins.
I'm talking about Bitcoin.
So Bitcoin,
Mining,
no, so there are people who are going to mine. So there are people who are going to mine, but then you need to have those mining farms. Do you have that capacity to do the capital investment?
people contributing towards mining as well as trading. Doesn't that make a difference? Or it's just left to trade. You have so many people more trading, whereas very few people mining. So who's
Right, so they are controlling it. There are few people who are controlling the mining market, and we saw this SegWit forking happening because there are only few people who are controlling. So that's the nature of it, right? It's now capital intensive.
So what are your thoughts on cloud mining then?
I have not explored. I have not explored. So for me, I am a pure investor. I would like to make money with less of the effort or no effort. Right? That's my core. Thanks.